Good morning, everybody, and this is your S&P 500 day trade setups for today. So the week has just continued to be a big up and big down type of week. The critical thing at the moment, and that was the flag. I'm not going to draw the bottom in, but that was the flag level. We've got two breaks to the upside, and nothing has really gone the bull's way at the moment. So there is the next level. So I'm just going to leave these diagonals in for now. So this was the first one, and then we've got the bottom of the flag. I won't say strong move up, sort of a ragged move up. But you can see how the oscillator is kind of just filtering down, down, down at the moment. Back in amongst the moving averages, trend is still up. Of that, there is no debate. And the trend line is actually all the way down here, close to the 155 EMA. So at the moment, the way this is looking is inside bar, pin bar on the weekly moving averages not getting a chance to cross over. This neckline that we've got here has been well respected for this double bottom. I'm more interested in the bigger double bottom, which that's the neckline there. But looking like a rejection. Look to the left. It is an area that you would expect some rejection, but it's just been a really messy 3 weeks, well, 2 weeks at the moment, to try and get some traction. So let's just move into the 3 hours. So at the moment I'm going to ignore the bottom part of the wedge, and I'm going to pay attention to 40.69, possibly even 40.50, which I would assume is down there. Yeah, 40.50 is down there. So I would be paying attention to this zone. Technically, we are inside the moving averages on the 3 hours, so that is sideways. We're ranging, and that's exactly what we've done for 2 weeks now. We start dropping below this, then I would argue we're probably looking for a bigger move down onto 4,000 again, and it'd probably be well worth it just putting 4,000 in on your charts, because that caused a lot of caused a lot of opportunities for us last year. Sort of targeting 4,000, buying off 4,000 and selling off 4,000. It's a big round number, so that's kind of the view that I've got at the moment. So it would probably be coming back into this zone. I would expect some form of a bounce, and then more than likely a continuation to the downside. So where would that bounce be off? And the logic is going to be quite simple right here. So that's 4,100. So I'm going to want to see what happens at 4,100. You get a rejection. You'll have an opportunity to get back down, firstly to 40.69 and then 40.53. So you're going to have an opportunity here. You're probably going to end up with a 100-point stop loss. You've got a 200-point gain for your first opportunity, and then you have a 370-point gain for the second opportunity. However, I don't want to be jumping in short at the moment. On the DAX, I'm looking for shorts. On the S&P, not quite there yet, but I am leaning towards looking for shorts. Now, if we just have a look at the structure yesterday on the 15 minutes, during the video, we were looking for a break above. We closed above the trend line of the flag. We were looking for a continuation up. Algorithms know this, and they found an opportunity to push it down with the jobs number and a little bit extra data that came out, and that triggered a whole lot of stops. But the algorithms came in here on a rejection of that trend line. Have a look at that. There's also a bit of structure to the left as well. You can see that pin bar there. And when you see pin bars like this, it's always a valid level eventually somewhere in time. But there it is there. It didn't quite get there, but you get my drift. That was your opportunity to be short late in the session, and I would still be holding that short. If I was in, my stop would be kind of just below this level here at 40.98. In actual fact, I lie. I'd probably have it just above 4,100, just anticipating a bounce back. So no interest in jumping in short at the moment. I do want to see what happens up here, 40.95, 4100. If we do get a rejection there, there's going to be an opportunity down. But knowing based on what's been happening the past couple of days, I suspect more of the same. So I suspect we'll probably jump past this area, find structure higher up, reject it down, and then just bounce up and down. And that's probably just going to keep me out of the market. So looking at 4100, the next logical level would be a little bit higher up at 4117 for a rejection. But you can see by all the lines that we've got in now that this is a very strong area of support at the moment, and also potential resistance. And technically we need to break below 40.50 for anything to be really validated properly. Anyway, the last thing on the hour is, let's just get rid of all this noise because it's just clustering the chart. The last thing on the hour is a break below the moving averages, and look what we've been doing. Below moving averages, above, support, 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 above, below, rejection, there, down, crossover. So logic is quite simple here. If any rejection of any of these tails that you see to the downside here, use this there, 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 any rejection here is to be seen as an opportunity to be short. If you can get in a short and you can get your stop to entry early in the session today, and it does drop quickly, you've got an opportunity. Otherwise, next week, that is the zone to be waiting for. Get it closed down here somewhere, wait for price to pull back into the start of the week, then get an opportunity to short this for a move to the downside. So that is brewing on the hour. But nevertheless, if it doesn't happen, it's sit in hands, stay away from it, don't bother, because it is really confusing at the moment. Anyway, hope that helps, and we'll catch up with you on Monday morning. Enjoy your weekend. Cheers for now.